All right. Well, again, welcome everybody to today's version of our Investors Launch on what makes family offices invest, for which we invited Arti Gupta, the CIO of the family office of DM Gupta, the Jaguar Group. Well, for many of you founders, thinking about family offices might be a bit abstract because whereas VCs engage a lot with family offices, founders often only care about angels and VCs because on the other hand, not many know and see the value in getting family offices as investors, but these can come with a unique set of capabilities, networks, and insights valuable to any growing startup. So, this session will specifically provide you insights on how to identify relevant family offices, how to understand their investment priorities and preferences, and also how to build long lasting relationships with them. In general, this is what our DueDash Investor Relations platform has been built for. Okay, this went very quick. Because we are game-changing startup investor hub that really covers that entire value chain of a startup investor relationship through data as well as interactions. So finding new investors, sharing all your data securely with them, and keeping them engaged via messaging and updates function to manage all of them engagements also in one place. So with DoDash, you can save up to 40% of your time on your investor relations that ultimately shall result in a successful fundraising so that you have more time on company building or building great tech that you're here for. So since we've built the whole end-to-end process also for the investors, you will find out that engagement will be a key to good investor relations and your own future success. And by the way, creating your profile is free of charge. And since recently you may have seen it, we also have a 14-day free trial for all the users for a full-fledged professional plan. So make sure to test it out and give it a shot. Last but not least, we've built out a global set of strategic partners and others that provide partially exclusive deals to our DoDash community. So every startup which is on our DoDash Investor Relations platform with more than 70% of profile completeness is actually eligible for up to 100,000 in startup discounts and credits. For the ones that have not been here before, we would be more than happy to get an insight into where you're currently standing in your journey, what your needs are, so that we also at DoDash understand better on how we can better tailor our solution to you. So feel free to take out the phone, take a screenshot of this here, but I will also post this link in a second for you. So I think that is enough for a short intro. And now I would like to hand it over to both Parul and RT, who I'm going to pin into this right now. So please go ahead, Parul.
Thank you so much, Marcus, for the lovely intro. I'm really delighted to welcome Aarti today. For those of you who haven't seen me or met me before, I'm the founder and CEO of DueDash, which Marcus very nicely introduced to you all. It helps startups and investors both by saving time and money. And we cover the complete value chain of the process from screening through diligence to portfolio management. As a serial entrepreneur, I've built multi-million-dollar companies in the past, invested privately in private companies for more than 15 years now, have experience in M&A and basically the entire shebang. So I'm really delighted to be here today as I introduce Aarti from DBR Ventures, which is part of the family office of DM Gupta Jaguar Group. She is an investment strategist, actually, and the CIO of her family office. She oversees the management of the assets, develops them, and she implements investment strategies, monitors the performance, and ensures that the investments are in line with their objectives. So I can definitely say with confidence, Aarti is a seasoned and active investor with over a decade of experience. She's passionate about increasing the share of women in entrepreneurship space. She's working very hard on that through many initiatives. She serves currently as a national head of Picky Flow Startups and is also board member and advisor to many other initiatives. So thank you so much for joining us today, Aarti, and making the time. I know you have a very busy schedule and you were traveling today and still you're staying up late to be here. And I would like you by starting sharing your journey that led you to become an investor and explain why startup investing holds very, very personal significance for you. I know that you are an industry agnostic investor, I would like to understand what triggers or what are the checks and balances do you consider when making those investment decisions when investing in startups?
Sure. Hi. Hello, everyone. Good evening to those joining from Europe, and good morning for those in America. Thank you for having me here, Parul. What a pleasure to be here, and delighted to share my experiences and insights on whatever questions you ask. So a little bit about myself. So I've been doing investing or investment management for about over a decade. I casually started, actually an econ major, got my master's from America, went ahead, got married, went ahead and wanted to do my PhD in economics, wanted to be an economist by passion, but started casually looking after my father-in-law's investments and trying to help him out because he was getting a little overwhelmed managing the family business and investments. And that journey over a decade led to us formalizing a family office, putting out a thesis for our investment. And about 5 to 6 years back, I think, we started naturally looking at venture investing as an asset class diversification. And what simply started as an asset class diversification to increase the alpha of our portfolio was something very, very exciting for me. I got kind of drawn into this world of founders, this exciting, amazing world of startups. And the more I entered it, I think the more excited I got about it. And that's when we formally set up DBR Ventures, which is our direct investing entity, which invests into early stage startups. So that's a little about how I got investing into startups. I think there was an entrepreneurial bug in me from childhood because my father's an entrepreneur and always saw him build businesses. And this was a way where I could help or be a part of an entrepreneur's journey by helping them build businesses. So that's a little about me. I think a second question was about our investment thesis. Is that what it is?
Yes, please. What is your investment thesis and what do you look for when you're investing? So what are the criteria that you look for when you're investing?
Family office, when we're investing into venture, we invest both through funds and also make some direct investments. A larger part of our portfolio is allocated to funds where we invest through managers and co-invest with them. As LPs, we take exposure at different stages and sectors of a startup. So right from, like your first check fund kind of a thing, right up to a pre-IPO level fund. For direct investments, I'm sector agnostic. I prefer to invest in early stage companies that are providing intelligent solutions to large existing problems, And since I invest at an early stage, usually a seed or a pre-series A, the capacity and capability of the founder is of utmost importance for us. I think that has to be the number one check and balance, or number one priority of what we look for in a startup. Obviously, the market potential of the idea is also extremely important. I mainly invest into companies that are for India. They could be set up abroad, but if the idea speaks for India, that's my area of preference.
That's amazing. And I think talking about checks and balances, and you and I have spoken about it coming into family and working with your father-in-law. So that dynamic is very interesting. Maybe we should have a separate session on that. But can you share some insights on how the family office, the way you set up, is different from a venture capital firm or angel groups fundamentally? Like in principle, how do family offices operate? And how they are different to these two entities who usually invest in startups, and how perhaps you set out DBR Ventures. In what form is it aligned to family office principles, and in what form is it different?
So I think, Parul, in my view, family offices serve as long-term foundation of generational performance driven by strong purpose and legacy. A family office is much larger than just investing. the roles and responsibilities. It's also larger than just venture investing, right? So I don't think they're like, comparable. But if you mean venture investing by family offices, and we can compare that to a venture fund or angel investors, of course, that can be. I think family offices are a lot of value add to have on a startup's cap table. They play a very important role as an investor in startups. And if I were to give like a one simple answer about how they are different to a venture capital fund or an angel investor, that would be patient capital. Family offices do not have this external capital raising dynamic, unlike a VC firm, right, which follows a process of raising funds, making investments, and they do have to return that capital in a fixed time frame. Family offices, we're investing our own money, the family's capital, and can invest based on a company's potential. And they're okay to either sit with that company and exit in a year or in 20 years based on true shareholder value, right? There is no pressure on them to kind of return back that capital. And this I've actually started to realize only like recently. I've seen a couple of instances where the funds have had to exit their holdings because the fund term was coming to an end. We actually had a co-investment deal with a particular company, which is at a pre-IPO stage, and the fund, because of its term getting over, had to kind of sell this good bet in their portfolio. But while as a family office, I could still sit on that company for as long as I want because it's my capital, So I think patient capital is where the biggest difference is. In addition to that, I think family offices bring in a lot of experience, mentorship, practical tips and suggestions for strategy, because more often the patriarch or the matriarch of the family office has been an entrepreneur himself or herself, right? They're the ones who had probably had a startup decades back when the word was not even the it word. So I think they bring in a lot of value to a company's cap table, and one must be aware of it. I must also add a word of caution that because I believe in our audience, we have a lot of founders looking to raise capital. One must be very careful about what kind of family office they raise funds from, right? Because today, not all family offices understand venture investing completely. So it's very important to see how sophisticatedly the family office setup is. What do they understand the nuances of venture investing? Because it's very different than public market investing, which a lot of them are used to. So
I think that's very rightly summarized, patient capital. And you need to be patient with family office because they might like you as a person. Maybe they want to still understand the market, or they just want to know you as a team if you don't come from their network, and they build businesses. So they'll be obviously curious about business models, the revenue models, the market opportunities. So definitely. And I think what you very rightly pointed out, like you could have been longer on the cap table and added value despite the fund had to exit. So that's a very, very valid difference there. At DueDash, we use a 5T model for assessing any company, which is team, timing, traction, technology, TAM, which is market opportunity. When evaluating founding teams, what are some of those critical factors that you look for, and what could be potentially some red flags that you try to get to? I'm basically asking what are the characteristics that you seek for in an ideal team, and what filters do you use to analyze any company? And based on your experience, what factors do you contribute create a success?
I mean, I'm sure, and you understand this really well. Like when investing directly, different stages of investment need different assessments, right? And since we invest at an early stage, the biggest risk is the founder and the market risk. So it's very important that we vet the founder completely, and that is more of an art than science, I feel, right? For me, I think the founder needs to have grit. They need to be able to really go through that roller coaster ride, because startup building is a hard journey. It's like you're in trouble when you're not making money, like you're not getting the orders, but you're in bigger trouble when you're getting too many orders as well, right? Because it's a roller coaster ride. One day you could be like on top of the world, and the next day you could just be like down in the dumps, and it goes on. So it takes a lot of grit. I think the founder needs to be able to hustle, and by that capability comes handy when you're fundraising, right? Hustling is a huge criteria for success, I feel. Tenacity, to be able to kind of withstand that kind of pressure, that what you build could go from 0 to 100 in a couple of weeks, and from 100 to 0 again, maybe not in a day. That's, to handle that kind of pressure requires a lot of tenacity. And most importantly, and this has to be one of the most important characteristic, is integrity, because when you are coming in that early in a startup, you're betting all your money on the founder. So the integrity of the founder is extremely, extremely important to us. And there are different ways where you can, it's not usually the founder lying to the investor, but the founder is dealing with everybody, with the team, with their suppliers, with their consumers, with everything, right? So integrity is very, very important for us. The ability to take an honest feedback and yet stay true to your idea. That's rarer than you think it is. Usually you either find founders who are so stuck up in their own world kind of a thing, who are not ready to see things from a different perspective. So that's a no-no. But at the same time, you have someone who's so willing to kind of adapt to an investor that they kind of forget their original idea. You have to remember that at the end of the day, you are the captain of the ship as a founder, and the investor is just coming on board. So the ability to take an honest feedback and yet stay true to your idea is very, very important for us. The ability to identify your moat. And this again is rarer than you feel in founders. We very often, I think founders don't realize what is their moat. What is that one thing which they have? Could be your software, could be the technology, could be what you have within yourself to build this company. But what is that moat? Do you know that? That is very important for us.
I think there are really valuable points that you mentioned, and I would like to zoom in on one aspect, because you mentioned you invest right from early stage to up to pre-IPO. It's a wide range, and because you're sector agnostic, so what are the differences for a company assessment, perhaps from an early stage to late stage? And perhaps one or two points that you could just
yeah, but Parul, direct investments we only make at an early stage.
Okay.
The wide variety goes when we invest as LPs into funds.
Gotcha.
To filter out or to assess and do the due diligence for funds, we have a whole different sheet, very different to that of a founder. That requires the experience of the GP and the team, the experience of the team and their previous funds and all of that bit, the sector they are in and everything. So largely direct investments is what we're comfortable up to the Series A. And I think,
that sounds fair. I mean, I'm okay with that answer that you just provided, so that's okay. So going to your question up your alley, given the current economic landscape and you're an active investor, how do you think your observation is? Because there has been an increase in the average duration between the funding rounds within just last 9 months was about 39%. So what do you think, how the valuations are affected in your standpoint? How do you evaluate valuations? And what are some of the key business models or revenue models are you looking to, invest in currently, or maybe it could be part of your general thesis? and finally, some insights on challenges and opportunities that startups are encountering in this environment.
So obviously today's, the whole macro environment has changed significantly, and we're seeing signs of it everywhere. The startup ecosystem worldwide saw a record capital influx, especially in India. I think we were in this whole exuberance era for the last half a decade, I think, but we're seeing recalibration, increasing macroeconomic uncertainty, fears of recession. It's kind of driven caution in investment, even though we're not seeing that in the Indian public markets as such. But we are seeing some signs of it in the private market. And honestly, we haven't changed the way we evaluate startups. I think India still remains a very attractive story for us. While there are macroeconomic factors that drove the slowdown in funding globally, India continues to be attractive for investors, given the strong fundamentals, the low leverage, the tech adoption, the favorable demographics. I think we're still a long way to kind of plateauing, and there's still a lot of potential. However, we're seeing some sort of a dialing down of the exuberance, which I talked about, which we saw in the startup ecosystem. More and more startups are realizing the value of the right kind of capital on the cap table, something which we spoke about earlier as well, right? Like the right kind of patient capital, capital which can be followed on in future rounds as well. Today, I mean, the funding winter is everywhere. And I don't think that there is a lack of dry powder, I know a lot of colleagues and fellow investors sitting on good amount of liquidity, and also at the same time, good startups being able to raise funds with ease. We ourselves have invested in about 4 odd startups in this calendar year. So investments are being made. But what we are also seeing is that a good number of startups failing as well, right? Or shutting down as well. But that's something which is expected out of this asset class. As investors, you knew that this was a risky asset class. And at the end of the day, the statistics do say that a good percentage of them are expected to fail. So given the shaky macro environment, today it's survival of the fittest season. And investors are becoming more and more cautious about betting on startups who've already kind of proven their model and built momentum rather than not looking at the investor money to do so. So in short, good startup, proven models, you can still raise funds. There's still a lot of scope. There's still a lot of appetite within the investors. But yeah, the heydays of everyone kind of being able to raise funds at crazy valuations, not seeing that happening,
So what kind of business models did you invest in? You mentioned you did some recent investments. What kind of business models or revenue models or the stage of the companies they were?
They're all early stage. We've invested into an elderly care company. We invested into a femtech company. We've invested into an e-commerce enabler. Yeah.
Wide variety, different business models. So yeah, some service, some product, some transaction based. So very interesting. So there was a lot of advice to startups to, keep their runway extension for 6 to 9 months before reaching out to investors. There was a lot of news about that. And we've been also telling startups, and some of the investors who were there in the previous events with us suggested that startups should actively build relationships with investors to generate interest in their upcoming funding round. So I think that goes well for the VCs and potentially angel groups and also angel investors who work very closely with these companies. How about family office? Do you also advocate that startups should reach out to you actively? What potentially you could also touch upon your active deal source. How do you source your deal flow at the moment, and how should startups get in touch with you, and what is the information relevant for you in terms of building that trust and relationship?
So, funding cycle has gotten longer, right? And today, and in general, also for us as family offices, we investing into venture is only a part of our entire asset allocation. So that number is restricted, that percentage is restricted. So if I'm going to kind of, for example, invest, or I have a plan to invest in about 10 odd startups, I am going to take the right amount of time to kind of evaluate that startup and meet the founder, because I only have 10 startups I want to invest into, or I'm able to invest into. So definitely not looking for startups who are in a hurry to fundraise and only have about, 1 to 3 months of runway left. It's almost a strict no, because we're going to take longer than that to kind of come up with a decision. We could come up with a shorter decision. There have been times where, we've met a startup, we've liked the startup so much, we've invested, the check is gone within 2 weeks. So, but we would not like to be pressurized for that. And that goes, as a family office, that's a rule for us, not just for investing into startups, but investing into any alternative space, any fund manager, even in the public markets. That's something which is a big no-no. Like if there is a deadline of a month or 2 weeks or something, we're not too keen to look at that. So in fact, when this whole funding winter started, we actually got in touch with a lot of our own founders in our portfolio, and we asked them to kind of rework their business plan, and who were in the fundraising stage, and then come back with a plan with a much longer runway, cut their costs and spending into almost like half, and try innovative ways which they could still maintain their revenues, and then go to investors with a much longer runway, because today the times are tough and fundraising is getting difficult, especially VC fundraising. A lot of VC funds have announced and are raising capital for the next fund, but they haven't been able to give exits to the current ones, and they're finding it sort of difficult to get a lot of LPs on board. So I mean, it's not just kind of the funding winter is actually there.
Yeah, I mean, it's true. I mean, there are delays on all levels, not just for founders, for venture funds themselves.
Yeah.
They're finding it difficult to raise money. And that's where DueDash tries to help both founders and as well as investors, because they've created a complete ecosystem right from deal flow to portfolio management, where they can showcase their portfolio and how they're performing with their LPs. And startups can share data rooms, investor updates, and their visualized dashboards just with one-click access control. And there are a lot of nifty features and simplified workflows to track progress, contact management, pipeline boards, a lot of stuff that's here. So those of you who have not experienced it, please feel free to set up a profile as a startup or an investor to supercharge your investor relations.
Yeah, very interesting, Parul. Like, what you've built at DueDash. So kudos to you. I think there is a need to build more platforms and companies like this, which make this whole process much easier. Because I think fundraising is such an integral part of a startup's journey, but it's also something which a lot of founders dread, and they kind of not look forward to. So anything which can be done to kind of ease this process is always welcome.
Absolutely, because you mentioned very early transparency, and I think trust building is very important. And I know the background of Jagran Group, so I think trust and transparency is the ethos, which I think is the vibe there. And to build that asset, you need to share information, you need to develop some strategies around it. And also fundraising is celebrated as an event on social media and every news, but actually it's a journey, because
Yeah.
you're in a relationship for 7, 8, 10, or maybe longer, like you mentioned, with family offices. It's a legacy. They could be with you much longer on the journey. So that means it's not a transaction which ends on that day when the investment is made. It's a step to a journey which needs to be built, and that's where the workflow has to be in motion and set up. And that's why we took that decision to build DueDash to take that investment.
Yeah, sorry. Very important point, Parul, like, and as we're investing into more and more startups, one of the things which we've started to kind of make note of is kind of see who's on the cap table of a startup as well, right? Who have they gone and raised funds with? Because trust me, it's very important to raise money from the right kind of investors. And we even, for some of our later, like, startups which have already raised funds, we kind of go and speak to their investors who've invested with them earlier and get like a ref check, like, how's the startup been, how's the founder been in terms of dealings, in terms of transparencies, reporting. They're all important aspects, and it's very important to kind of make sure that in your initial days you do things right. I mean, you do things right throughout, but this initial trust building with your first few investors is very, very important. I think it's something, this is a small nuance which a lot of startups miss out on. Initially, they're in this frenzy about to kind of raise money from whoever they can. And that's one of the biggest mistakes a few of them can make.
Yeah, I think very rightly said. So we touched upon it earlier in one of our conversations. I know you do invest in climate tech and clean tech and related technologies, but it's not your forte because you come from a very commercial and economic background. But I would like to get to know your take in terms of how do you foresee the importance of interdisciplinary collaboration, and what could be some of the creative solutions that could drive the change. There is a lot of talk about supporting decarbonization efforts across the globe, and also the role of data in helping different industries to meet some of those targets. If you have any views on that, I would be really happy to hear those.
I think in VC investment space, the key drivers of success going forward are likely to include a combination of factors such as adaptability, domain expertise, access to diverse networks, and a focus on emerging technologies. Creative solutions can drive change by identifying innovative business models, disruptive technologies, and new approaches to solving complex problems. You rightly said, interdisciplinary collaboration is crucial in addressing climate change, as it brings together experts from various fields to tackle the multidimensional challenges that we face. Climate change is not just about the environment, right? It's no longer just an environment issue. It intersects with our economics, it intersects with politics, the social dynamics, the sea levels rising, where do we live, all of that kind of stuff, So collaborative efforts enable comprehensive solutions that consider the interconnected nature of these challenges. Data plays a vital role in achieving these goals, and it allows for a better understanding of different things like energy consumption patterns, identification of inefficiencies, development of targeted solutions. So lots to do, not my kind of area of expertise, but I think today, as a human being living on this planet, none of us can include or ignore climate change, right? It needs to be a collaborative effort.
So you definitely see that to grow, and also this would be one of the factors for you to look into when you evaluate deals. That's what I hear as an underlying thing.
Yes, absolutely. I mean, we do have, a couple of companies in climate tech, but personally, like, I like to invest in companies where I can add more value than just capital. And while I deeply believe in the whole purpose of climate tech startups, I don't have the expertise to kind of add more value other than capital. So that's something which we do not actively seek out. But yes, if there is a good idea where we can support, why not?
Okay. So I'll ask you some quick rapid fire questions for you to answer in short 1 or 2 sentences. Let me know when you're ready.
Sure.
Okay. So what would be a great 1-minute pitch or an introduction? What are the key elements that it should contain when somebody's talking to an investor like yourself?
I think, and I've said this multiple times, like, people have asked this question about how do you give out a great elevator pitch, or, what should this be? I think one of the sole agendas of a founder, if you have 1 minute with an investor, is to be able to make a statement which will get you the next meeting. That alone is the purpose of an elevator pitch. Your idea is to just get that next meeting, because in that 1 minute, you can tell your name, what are you solving for, your passion, anything, but your purpose to whatever you speak in that minute should be able to get the next meeting. That's it.
Share one craziest idea that was ever pitched to you.
So I got pitched this idea about a women's safety app. And I thought it was an interesting idea, but it got a little crazy because the app had this technology where it would only send out a trigger or an alarm to the known one when the woman would or the person would start running in circles. And I thought that was just so crazy because the founder refused to kind of see the craziness of that part. But yeah.
Okay, what are some of the latest trends in technology that you're watching and feel strongly about?
Health tech is a big trend I'm seeing. I think India is such a large country. I think we're not yet equipped to take care of the health needs of such a huge population. So health tech, space tech, and femtech. I think we're still building companies which view women as a niche and not as 50% of the population. So betting huge on that.
Okay. So this I have to ask you because there has been a lot of hype since March. What's your take on generative AI?
Generative AI is, it's something which we cannot ignore. It's part, and we're all using it. I think balance is the key. I think it's extremely important that we balance the potential with the risk it possesses. So, it would, while it has so much of potential to kind of disrupt the way things are, it would require regulation, but in a way which will not just keep a check, but also continue to harness and encourage collaboration, research, and development, while providing safeguard against potential harms. So balance, I think, is my take on generative AI.
Yeah, I think, again, it goes back to the ethos, transparency and trust and responsibility. So since we spoke about the data-driven approach for investors and founders to build trust through transparency, I'd like your take on the growing landscape of online private markets and fractional ownership. Do you have any views on that?
Not really as such. Like, we've invested into a couple of alternatives asset class, which with fractional ownership, but only in the real estate sector. But why not? The only thing which I feel the startup ecosystem, if it moves towards fractional ownership, would be higher due diligence. I think there needs to be systems with checks and balances in place to kind of take care of that before we start doing this.
Awesome. So your advice, because we do have some investors, angel investors, and some other people who like to invest in startups, what would be your advice to investors when investing in startups? Should they invest, and why should they invest? Or even in VC fund, what would be your advice to them?
So one of the first things I feel if you're an investor looking to invest into venture is to identify why do you want to enter the space? You know, is it an asset class diversification for your existing portfolio to get that extra return to boost the IRR of your portfolio? Is it to value add to your existing business, you know, by exploring new ideas and tech within your sector? Or do you feel that you have a certain set of expertise in a particular domain which can help the startup fast track their growth? I think or it could either be a combination of all three or any other reason. But I think the purpose of why you're investing in this asset class should be very clear. I mean, I mentioned this earlier. For me, it started as an asset class diversification for our family office, right? We had been investing in debt equity and thought that we should explore investing in startups as well. And later I realized that individually and as a family, we have certain expertise which I can help with and mentor startups. So identifying the purpose will help you create your investing thesis, and that can create the funnel through which you filter down pitches. Because once you put out there that you are an investor looking to invest into venture space, believe me, there are going to be more than enough startups chasing your money. But the trick is to get the right deal flow, right? Because while there are more than enough startups chasing your money, you know, there are not that many good startups for these many investors. I don't know if I've put that point across right, like, you know, because there are such few good startups who are not chasing investor money, like, you know, and you want to be that investor who actually those startups reach out to. So it's very important you create your right investment thesis and create that funnel through which you filter down your pitches. And this will help you kind of weed out the unnecessary pitches.
What qualities do you value most in a professional relationship? I know you mentioned integrity.
That's number one. That's integrity for me is right out there at the top. I think everything post that is secondary.
Who was your childhood inspiration?
You know, I kind of drew inspiration from different people. Personally, I didn't have to look that far. My dad always played a huge role in, you know, me aspiring to dream big. He was actually a farmer turned entrepreneur turned business leader and then a politician. So wow. Yeah, I mean, so he taught me that the person's future is in their own hands, and you can realize any dream if you put in the work. And in addition to this, like my mom, she was a homemaker turned industrialist. She taught me that no matter what your education is and what your background is, you can always learn and evolve. So, you know, she's a mother to 3 children. And at the age of like 45, she learned to run a manufacturing unit with 400 employees. So drew inspiration from different people. I love to read autobiographies. They're my favorite genre. So while I drew inspiration from many of the famous business leaders and world leaders, I think mom and dad have to be closest to my heart.
Yeah, top on the list. You saw that firsthand. So what are you currently reading?
I'm reading The Intelligent Investor by Benjamin Graham.
Amazing book.
Rereading that. I also just got back from a holiday, and on the holiday, I picked up a book which my 13-year-old daughter was reading. It's called They Both Die at the End. And it's about an app service which calls you 24 hours before you're going to die. And I thought that was that's a crazy idea to be pitched, right? Like maybe somebody's going to pitch that.
Yeah, I heard about that. I did not know there was a book written on that. So that's really curious.
It's called They Both Die at the End.
Yeah. Okay. So what drives you when you get up in the morning?
I think the belief that I can rise by lifting others. That's the motto I live by, like rise by lifting others.
Very inspiring. So I'm going to take some of the audience questions now. There was a first question by Marco. He asked about the focus of investments. Is it, I think you mentioned that anything to do with India, he was asking, is it just India or do you also look for things beyond that? So their company is a deep tech company, a combination of hardware and software. They want to go to India, but they're not there yet. Would you, when should they reach out to you, or when would you consider them?
Yeah, sure. I mean, if you want to come into India, we have made a couple of direct investments overseas as well. It's just that my preference area is India. It's a market which I recognize. It's a market which I can connect, network into, it's that's the preference area, but more than happy. Please do reach out.
Sure. So we'll definitely facilitate that. I think that's more of a question. So Marco, we'll take that offline. Then the second part of your question. Then the next question from Mark is that you mentioned you're directly investing from your family office only in early stage companies. How do you define early stage investments in terms of stage of the company or the check size range, or should there be any particular, percentage of the equity that you're looking for in the company? And what type of support does your family office like to add to the team?
Not very stuck on the check size and the percentage, but we do seek some level of market validation. So it needs to kind of it shouldn't just be at an idea stage. It needs to have some sort of market validation.
Do you want to quantify that, Aarti, to some level? I mean, for the founders, like what market validation would it be on revenues, contract values, or broken even?
But we have in our portfolio companies which were doing just about 5 lakhs, 2 companies which were doing a few crores as well, right? So I know the range is pretty big, but that's the beauty of family offices, right? We're not restricted by that, like that big thesis, which usually this thing, like, you like an idea, you think you can add value to it, we'll go invest into it. And in terms of adding value, in addition to the money, it's going to be a lot of network, a lot of ideation of business strategies, connecting, helping with fundraising.
That sounds pretty broad, I would say. I think the key message is make them fall in love with you and they will invest in you. That's what I hear.
Yeah, I mean, at the end of the day, the idea needs to kind of be amongst the top 10 if I'm going to invest only in 10, right? So, that's the criteria.
Okay.
If I have to choose only 10, then I'm kind of pick and choose.
Sure. So the next question is, do you make moonshot investments into new digital tech like digital fashion or metaverse technologies?
We do, but I have to kind of give in a caveat here. So, I'm born and raised in a traditional business family. So at the end of the day, for me, the bottom line is extremely important as well. So, I need to see some sort of money making in the near future for me to kind of agree with me. It's just the way I'm wired, I think. Like, I've grown up in a family. I've seen my family build traditional businesses, and they are at the bedrock of solid bottom line, like, solid profitability. So while I know that startup investing is a completely different ball game, and moonshot ideas are great, like, but somehow my brain is wired a little to look for profitability in the distant future.
Yeah, I think that's common to family offices, because they build their wealth through traditional businesses, most of them, and this is like what you said, it's more about legacy creation and preserving wealth for future generation and stuff like that. So they are looking for that sustainable business model, or your take on a business model where you think you can provide them returns, if it is not immediately, like over a period of 2, 3, 4, 5, 8 years, whatever that horizon is. So that's definitely the key here. So when founders are talking,
I'm not looking for, like, 80% of my startups failing. Like, I don't believe in that model. Like, like, I know that's the model out there to to regular investors, but I'm not looking for my businesses to fail. So
Sure. Yeah, definitely. So when the founders are talking to a family office or to you personally in that context, of course, venture funds have a different thesis, and they're looking for a failure rate. But what is important for you? Like, what should be the first line they should be writing when they reach out to you? That this is my current growth rate, and this is the growth rate that I'm looking for, and this is my revenue, and that's the forecasted revenue, something like that.
I think the first should be like, this is my idea. Like,
Mhm.
this is my idea. This is what I think. This is the solution I'm providing to the problem, and why do you think that you're the only one who can provide the solution, right? A lot of founders also do not do decent enough competitive analysis, and they kind of ignore the competition. Somehow you're so married to your idea that you kind of forget that there is someone else. If it was such a good idea, why hasn't someone else done it, right? Like, so you need to have the answer to that as well. That could be your own grit, determination, that I'm the only one who can do it, kind of a thing. But you need to put out there, you need to be able to identify and convince me that why are you the person who is able to solve this particular problem.
Okay. There's this question, would you ever invest, I think, in stablecoin? I don't know, maybe crypto is the question.
Investments in crypto.
No, obviously not. And so what is one idea that you are looking could, be potentially revolutionary? Because you mentioned health tech and femtech, and you're pretty passionate about that. That's where you see a lot of new innovation is happening, and that those are some of the markets you are focused on. But what would be one idea which you think should be there, which is not tackled by anybody so far?
Oh, difficult one. I don't know. If anybody in the audience has an answer, pitch it to me.
Okay, that's a good one. Turning it around. Okay. Could you walk us through your investment decision process? Is that you? Is there an IC? And usually, what is the time frame does the family office take in terms of taking that investment decision?
Yeah, we do have an IC. We have a set of advisors on board as well. And mainly the decision is taken by me, but we do have an entire discussion and filtration process around it. And I think the usual time frame we take on average is anywhere between 6 to 8 weeks.
Okay.
You can connect with me. Yeah, you can connect with me on. You can connect with me on LinkedIn. Happy to share my email address. Write to us. If the idea is of interest to us, my office will reach back, ask for some details, and then we can get on a call and take it from there.
I think you've already mentioned that, and you're there on DueDash as well. So the startups can pitch you through DueDash platform as well, and your office team is already there, so they can definitely tackle those ideas for you when they pitch you through the platform. So we talked about the craziest idea that you heard before, and you said that an elevator pitch should be something to get the next meeting. So would you have an example of a best one sentence pitch that got your attention to give somebody a follow-up meeting?
Oh, not really, but I mean, I've invested into companies which have reached out to me on LinkedIn. I've invested into companies which kind of were recommended by a friend's alumni network. I see a question about Shark Tank. So I'm on a reality show out of India called Horses Table, which is very similar to Shark Tank, an Indian version. And I've invested into about 7 companies from there actually, and some very good investments out there. So I don't think there is any clear-cut formula to approach an investor. I think you need to be unique. The idea is if there was one cookie cutter formula, then you would not stand out, right? An investor normally on any given day gets pitched about, or at least receives about 7 to 8 pitches, right? And for you, and that's in a month, kind of about 100 pitches. And so if you want to stand out, you need to not have that cookie cutter opening line or that cookie cutter pitch. So you need to be different.
You need to innovate, know the person, figure out what could be their buttons to press, and try to grab attention based on just reading up a little bit on them. So I think that's not bad advice. So Aarti, if you were to give...
Yeah, Parul, at the end of the day, it just needs to be a good idea. If your idea has potential, trust me, the investors will come onto you. You don't need any gimmicks. Like, you know, it's just that your idea needs to have that potential. So...
Okay, gotcha. So if you were to give one piece of advice to young Aarti, what would be that advice?
So I think we often overestimate what we can achieve in 1 year and underestimate what we can achieve in 10 years. I would advise my younger self to make those big 10-year plans and think big. I always was one of those people who were like, you know, my next step, which college am I going to do, which grad school, like, you know, and I always planned for the short term and never thought for the big long-term picture. So I would suggest her to think big. Also start investing early, maybe start investing for your kids or when they're just born, like kind of, I think you're never too young to start investing.
Okay, that's some solid advice there.
Yes.
Yeah, that is the economist coming back to everybody.
I know, I kind of put in those models somewhere or the other.
Yeah. Awesome. So it's been fun talking to you, Aarti, and I know you are on the platform, and I'm sure the founders will reach out to you, and I'm sure you'll be able to find some amazing startups on DueDash, and looking forward to your engagement there. And listeners, if you liked it, then please share it and give a shout out to Aarti for sparing the time. She just came back from her travels and she said she was on holiday. She took time for us. So thank you very much, Aarti. We got you right back into the grind, making some startup decisions, and we'll definitely be sending you a few on your way.
Looking forward to it, Parul, and what a pleasure it was to be here. Thank you everyone for joining.
Thank you so much. Thank you. You have a good evening ahead. Thanks everybody for joining. Have a great day ahead.